Hello guys, welcome to the Trading Parrot. Bitcoin is rallying into 119k and people are wondering, is this a retail-driven, leverage-driven rally? Is this because of October? Is it because of government shutdown? We all know that we have a bunch of elements of risks on the downside, but a new pattern on the daily time frame is emerging. I want to discuss about that and how I'm treating that in terms of my own trading. A new position has been open and I want to discuss on detail why I'm doing that. Of course, all the details have been already sent to my Patreon community via email, so they are all fully aware. If you want to join that, you can join the link in the description, find the Patreon link. And if you're looking for a new exchange, you can open an account on Tubit. It's been developed by the same people from Bybit, so it's very, very easy to use. You spend 2 minutes to deposit crypto and start trading with leverage. No required KYC, it's optional. You get access to all the altcoins and they deposit $50 in your account to start trading for free. Then if you deposit your own money, you can get up to 30,000 in rewards. Cryptoquant is saying the bull cycle is slow, but still in progress. The current market is progressing slowly within the bull cycle, but there are no signs of an imminent end. In fact, a strong upward move may be just around the corner. That is coming from Dan, Coin Investor. You can see how as we approach a market cycle peak, the realized cap bands are shrinking to the downside, which is more or less what we've been doing. But there's still plenty in here to compress to the downside. I guess that is the point of Dan. Axel is saying that Bitcoin in equilibrium with growth potential to 130k. We have bounced from this middle line a bunch of times in the past, and there is now a potential for the MVRV pricing bands to expand. This one in particular is analyzing the short-term holders. And we got some news about the US Treasury, which is buying back a whopping 2.9 billion of its own debt. It's been also covered in this other account. Bank reserves at the Fed dropped 21 billion last week to 2.99 trillion, the lowest since January. This is one of the lowest readings since Q1. You know that we've been tracking the Federal Reserve balance sheet and it's been pinching that 3 trillion mark. It's been just in decline from the 21st of July. They've been just reducing and reducing. And this is one of the things that doesn't really make it bullish because as you can see, if we compare the price action of Bitcoin relative to what the balance sheet is doing, typically on a downside like this, you enter bear market, particularly if it's very sustained. Whereas when you start adding to the balance sheet, then you start a bull market. So this is just a worry. Of course, you can get some shrinking in here, which brings some downside into the September in 2020. Into 2021, there was a rally as long as we then break out to the upside. So the best wishful thinking that we can have in here is finding a bottom at 3 trillion mark and seeing a reversal. And in this account, it says, according to the Fed, the ample reserve level for smooth market functioning is 2.8 to 3.4 trillion. Is the Fed about to end quantitative tightening? Interesting thoughts. Another thing that's interesting is that Anoop is saying that the RSI is coiling up. So we might be in for the last ride. I'm not sure if he really means this, but look at the previous cycle, the one in 2021. You can see that we have 3 touches of the period of descending highs on the RSI. I wouldn't necessarily track that one because that one is already in the bear market, but this attempt in here, the one that pushes the price into 48k, that was the dead cat bounce that fully confirms the bear market. And that is, for me, the third touch, not this one, which is a bit too late. That is the touch of the FTX collapse. Whereas in here, we get 3 touches already. and the third one doesn't manage to fully test the line, and he's implying, well, maybe we get a fourth that actually breaks out. You can see how this contradicts the previous performance. The most likely scenario, if you ask me, is to go into this line just for a retest and we get 4 touches, but still then we enter in a bear market. Now we need to leave the doors open for a breakout, for something to completely be different this time in the cycle, because every cycle we get something different. Therefore, we cannot just rely on past performance purely. Axel is saying high bull sentiment on futures, October. Yes, this is the advanced sentiment index, and I guess the combination of seasonality with October and a bunch of other elements are kind of flipping the coin at the moment. Roman is saying on the 4-hour time frame, we are looking at this further pullback retest. Makes sense as shown by LTFs. He's looking for a retest. It could be the case. If that happens, my new position might be in trouble, but we'll talk about my new position later in the video. Everything is overbought, but no signs of initial weakness. Simple breakout and retest. Volume, RSI, MACD look good for continuation. We are finally seeing some spikes incremental in the volume, and that is positive for the move to the upside. So when it comes to my first position, the long one, I am still trailing it with a stop loss. I am gonna give it a little bit of extra room to breathe just in case, because I don't wanna be stopped out too early. If this initial rally on October fails and we go into CME Gap at 110, well, I re-enter and insist. But if we really wanna go way higher, let's say 130, I wanna make sure that I catch that move to the upside with my long. BTC leverage driven pump. This was shared yesterday, but I still think that is the case. But notice on this rally in June, it was also driven by leverage. And you can see that leverage can produce this sort of nature of rally, which is impulsive move and then they take profits. But people step in with new positions and then again driven by leverage, and you can continue. So we need in October to be prepared for a leverage driven pump that has some pullbacks that could potentially get bought up pushing higher. Where could that be completely different? If you rally with leverage and the general market puked on that leg down, there is no such a thing as another buy up that will actually accelerate to the downside, joining whatever puke the general market does. And that's why in these videos we always cover general markets as well. I am very tempted today to put a separate video for general markets, making these videos shorter and allowing the people that really want to be outside the bubble of crypto, understanding what's going on in the macro, with a dedicated video. Let me know your opinion in the comments, and remember that there are always timestamps, not just on this video but in all my videos in this channel. So let's look at the news according to ChatGPT. What matters today? US spot Bitcoin ETFs log strong net inflows, so that's a 676k inflow. You can see it in here, and this is back again in the all-time high on spot. Ethereum is still following, but it started very strong on the 29th with 500, but now it put only 80. There hasn't been any selling. So far, it's just a slowdown with Ethereum. So that means that Ethereum is acknowledging that Bitcoin dominance needs to take now the prime spotlight, because this could turn into a strong pump. So Ethereum supports that idea by slowing down in here. If this was 500, 700, 800, then it means that Ethereum has the confidence that it's its turn again. It's just following Bitcoin, but not necessarily taking a major step in Ethereum dominance. It's letting the king speak at the moment. Bitcoin tops at 119 so far as US government shutdown begins. We are on the second day of shutdown. This also may delay macro data and spur a risk bid. Cleaner positioning plus cheap options create event-driven upside volatility potential. That's also a 7 out of 10, also bullish. And we got a 4 out of 10. Let's see what we got. Citigroup trims year-end Bitcoin target to 133k, lifts Ether outlook. Interesting, it's lifting the target of Ethereum to 4.5k. The 12-month target though is 5.4k and 180 for Bitcoin. Well, of course, you know that I don't care. I don't take this as an advice for me, but I like to see what the rest of the herd are reading, and I use that in my advantage. Let's call it to front run them. So as usual, I ask every single day religiously to my community in Patreon for them to share their questions. We're gonna read them. What signals are we looking for to confirm this is a consolidated move up and not a crazy extended dead cat bounce? Yeah, we have a daily confirmation of a breakout. That's on our side, but as we are gonna see later when we look into the daily time frame chart, there are some signs of weakness coming in from some signals. We always get signs of weakness during a pump. Don't get me wrong. I'm not calling for this to be finished. That's why I still hold my long, right? But every time I'm in a pump, I see those signs of weakness and I have to take a conscious decision. Do I take them or do I skip and say, no, I'm just going to put my stop loss slightly lower in case there is a pullback, or I put it very close to the price in case I am buying in to those signals that are bearish, to lock in a little bit more at the risk of getting stopped out and then carry on to the upside. When to start looking for a short position? Or are we in a banana zone? I think there is a chance that we enter into banana zone. And yes, guys, I am taking a short position. This position is a small one, entering from 118.6k, and I'm gonna explain in the rest of the video why. My long is still rallying, so you may be wondering, hey, how come are you running both at the same time? Yeah, that's something that you can do. Alternatively, if that sounds just too confusing, you can trim some of the long and re-add at the place where you will have, taken profits from the shorts. That has kind of the equivalent effect. But personally, I like to manage the two positions separately and manage their sizes as well, independently. Morning, what is the likelihood of going back to the CME gap and the liquidity at 107 before making a new all-time high with seasonality in mind? Frankly, there are a bunch of things that are bearish, but we really cannot take them for granted to go into those levels. There is a slight opportunity that we do that, something that now is bringing so many bulls. We are at 64 and fear and greed index. And if this goes too fast into the extreme greed, it can really pop at any time, go for that level of 110, close the gap, and still resume into October, November. That's something that we already did in 2024, so we really cannot think, yeah, that's not gonna happen. That will be silly. But it's also silly to count on it. I will personally, right now, not enter in a long. The risk to reward at the moment to enter in that long, if there is no decent pullback, is really crap. We just took a lot of liquidity. Well, anyways, I don't want to get ahead of myself. I'm gonna cover everything anyways. And yeah, just check the timestamps if you're gonna go straight into something specific. It is really possible for BTC to go to all-time highs at 140 and 150 without taking the liquidity at 107. It is possible. I'm tempted to say that is low likely, medium likely. Has this happened in the past where 50x or 100x leverage longs are still there? I remember seeing a post on Twitter, I don't have it anymore, that was saying that the average of the leverage is increasing a lot. We need to look into that. So yeah, definitely the average has increased a lot. As you can see, all these red areas are precisely that. Don't worry, Brett, we are gonna look into liquidity pools later in the video and we will see where they are placed. We can even scroll back in time to see those areas of the pumps of 67k. I'm sure that they are still there in the chart on Trading Different. If you want to get access to Trading Different, there's always a discount in the description. It's full of discounts. Eric says that all his questions are already asked. Is this pine retail driven? Spot leverage? Google BTC increasing? What is the purple well doing? Yeah, we'll cover all of that. I actually skip Google, but it remains at the very lows. We're very close to putting an all-time high and no one gives a damn. At least retail doesn't. I'm gonna put all the general news, everything to do like this into the general market video. But you can see that in October, the rate cuts have increased now to the maximum. We have probabilities of ease are 100% split between 25 basis points, 99%, and 50 basis points with a 1% for the first time now for end of October. And it seems that the market, the government shutdown, could be influencing this together with skipping some of the metrics that are not going to be shared in some of the incoming meetings. Apparently, that's what I understand. If I'm wrong, just write it down in the comments because I haven't seen any official information on that sense. And at 12 p.m. UK time, we are going to have a private TA session. We have a public one on Tuesday. It was really overcrowded, but if you really want to ask your questions, this is still the time to join as an elite member on my Patreon community. And you get to add your own coins to this poll. You get 5 votes, so you can vote for someone else's coins or for yourself. You can give 5 votes to your own coin and then you secure it. And live, you can ask questions. That video, the one that we are going to record today, is going to go live tomorrow on Friday. Edit with timestamps and everything, so do not miss it if you want to watch it for free too. Price breaking out, leverage aggregated, so far breaking out. We can see that intra-candle is beyond this level. Price has already done the breakout. I can show it. So taking the lead, the price and aggregated open interest is following up. That is something positive, but we need to see tomorrow if that holds there. Remember, we are right at a level very important, 119, 120 psychological level. Loads of liquidity at that level. We look at that yesterday. So there is a potential for failure or for a little bit of a pullback as well. October 4% up, September closed 5% in the positive. So far October is following the past performance. What is that? Performance. So in this video, we are gonna always acknowledge the risk. We have the 110 CME gap, we have the 107 past 3 months still biggest liquidity that you can see that still is the biggest in the past 3 months. We are taking this 120, which you could say why we went to this is way less than that. Well, the key is to think, is market maker really going just for that short-term liquidity, or is it looking to produce in here a reversal pattern? What reversal pattern are you talking about? Well, here we have a double bottom, and this is another double bottom. So we could be going for number 2, which is located at 125K. That one doesn't appear in the chart because it started forming in the red 100 days in the past, and that is more than 3 months, which explains perfectly why we don't see in here something really intense. But definitely it could be the case that we are going beyond the 120 into the 125, which is that big block that comes from older than 3 months. The Bitcoin status has been updated and already shared in my community post. The big changes is that we have a confirmed daily breakout. We have the Gartley pattern, the one that I'm gonna focus next once we go into the daily. And we have tested perfectly the CPR resistance. We'll look into all of that. Let's start with the 4-hour. As you can see, we continue to climb in the volatility in here. We haven't yet made a move down in the volatility to produce one of these P signals that I will expect anytime to appear in here. Notice that my inverse head and shoulders has made already pretty much 80% of the target, hitting 119.5. The target was 120.5. So we have just 1K more that is also overlapping with the 85 RSI that was at some point at the point of contact was at 120.3. So just $800 away from reaching that level at that point. Now, since the price came back down, forming some sort of bull flag, the target went up into 121. So if we want to hit 85, we have to go into 121 now. And there is a new line in here. This is my preferred new next line of support. We still don't have bearish divergences because this is putting a high together with the price, and that is good. Once we start putting bearish divergences, we could be looking into coming back down into 62. For that, probably this needs to take a pullback, then it needs to fail to put a new higher high, and that's how we go in that direction. That could be the sideways consolidation before the next wave up, or it could be the failure. We need to be open for either. We have no clue where the price is gonna go. We just know that whatever we do, we need to do it strategically thinking so we make money, even if we have no damn clue where the price is gonna go. That is what a professional trader does. If you are watching a channel where they're telling you the opposite, there is always the option to unsubscribe when you're watching crap. Something fantastic that you can do is leave them also a message telling them, I'm out of here. I'm going to be watching the Trading Parrot, which is the only legit and honest crypto technical analysis in the whole YouTube. Here we have a pattern that is calling my attention. This is a Gartley pattern, and I don't give a damn if I'm pronouncing it wrong. Indeed, I'm going to say it in Spanish, Gartley, because it's sexy and I know it. Here we have this putting a high, and that completes the Gartley pattern at 119.5. It doesn't have to play out, but it's got some probabilities that I completely ignore because I don't have the full history of performance of this pattern, but it's a bearish pattern on the daily, and it's happening right after we break out. So this breakout now has a task. It's got a job. It needs not to fake out, right? If it fakes out like this, if we go beyond the 56 back down, we confirm that the Gartley is doing what it's supposed to be doing, which is to send us into CME Gap or send us for a higher low. No one knows. We'll see. So where is that support on the daily for a retest, a healthy retest that makes failed the Gartley bearish pattern is at 56. That's again my opinion. I'm wrong many times and I don't care. 56.2. So I'm gonna say that if we go beyond 116, maybe 400, that if we close the daily below that, then it's high likely that the Gartley pattern is going to play out and it's going to send us slightly lower, potentially into 113 or maybe even closing the CME gap. Remember, intra-candle, we can even go to 113 and then bounce back up, closing the daily above 116,561 is a healthy, perfect retest. If we do that, then we can talk about 83, 84 RSI on the daily, which is currently pointing down, accelerating to the downside, but as of today is 141K. It used to be 160, but the move up of the price makes the RSI converge with the price. So if this takes very long, the target is lower. If we accelerate exponentially, we meet with that line sooner, therefore we can aim for higher. That's what is called an exponential move. And to the downside, of course, with the move up, these guys are running away from the price. The support of 40, which we already broke, so maybe we shouldn't even be tracking that one. I'm just gonna track the global support at 26. Let's see where that guy is. Let's remove this one. And the global support is at 93.6. And by the way, if you want to know the expectations and the ratios to form a Gartley pattern by the book, that is 119.5. And this is supposed to go somewhere in between C and A. So let's go back into the price, and that is in between 108 to 106.7. This is another version, but it's just the same, pointing between A and C. And that is also where we hit the first resistance. You can see that resistance at 118.8. Now, what happens if you are in the short now and this guy goes into the next resistance of 123 or we go into 129? Well, we got some other places where we can add into the short. and we are also rallying with a long. Therefore, we are hedging. So that short is already protected. It's just discounting from the profits of the long. But we could close the long very high and we could add into the short, at which time maybe if we get a strong leg down or we start going sideways with a new range at 130 or at 150, that short is also gonna print some money for us. It's all part of my strategy, which can always fail. It hasn't failed in a year, but I could be absolutely wrong and Bitcoin goes into $2 million, and I'm gonna have to be like, ouch, everything is possible. So weekly, very important because it conquered the point of control of 118. It conquered the resistance of 117. Well, I'm saying it conquered, but we are intra-candle, guys. So far, it's looking like it's gonna conquer those levels. Look at this candle. It went into an all-time high. We could have said that this conquered a lot of things, but then it ended up closing below resistance and putting a double top with large candles up. So if these guys put another candle up and it ends up in the red, that's a huge, huge disaster for this week. But of course, so far we have to say what we have achieved intra-candle, which is an engulfing green candle that is very positive. Let's keep it that way until Sunday and we get pretty much secure a lot of additional upside. And this is nice, guys, because the stochastic RSI on the weekly is about to open the mouth. With this move up, is preventing the bearish cross. That is where we want to go. We continue to put leverage squeeze signals. We are in an area in there where I do not like to take longs, despite the fact that sometimes being in this red can be sustained. You can get 1, 2, 3, which personally I use to average shorts. Once we get the yellow ones, yes, that's what I do, assuming that there is confluence with other elements, of course, because eventually the longs pull out and this thing collapses. Still, we don't have yet a yellow, which is a high quality one. I'm surprised why we don't get it. We are exiting the upper band, but there are other conditions part of this indicator. By the way, all my indicators, which are probably 100 of them, you can find them in the shop on Patreon. And you can access them via your own TradingView account and getting the alerts set up, integrating them with bots, or you can also access them via Telegram. Just go to my Telegram channel, the link is in the description, and then once you join, hit TTP charts. That's how you're gonna be able to see all my charts. People are constantly requesting them, not just Bitcoin, general markets, and all coins. And I forgot to say this, but we touched the first resistance in October. We are in a virgin month that is bearish because we should go back down and test 113 according to that. That's another risk for October in case we get some resistance, this or that one, to reject us back in here. A correction from here into the pivots is just a 5% down. The SOPR, as you can see on Bitcoin, is accelerating. And you can see this trend in here. So there is some sort of breakout in terms of people taking profits now in the green. So every time the SOPR pushes down, people are taking losses. They are closing positions that are in the red. Every time it pushes up, there is a ratio of people taking profits in the green. So many people were waiting for this to close positions. So there is currently some profit taking, not as much as in July in here, where there was a huge amount of profit taking that spiked the most at 109, but that print the sell signal there, and then they carry on rallying. That can happen sometimes. Let's look at the open interest. At the moment is approaching that level of 11. We are at 7%. So I would say the higher we go in here, the more confidence to enter in any short. Just be aware that you can be above the blue line and the price can still rally, like in this area in here, right? You can pinch here, you average a short and you get some downside within banana zone. You can pitch it multiple times at the top and still push higher. Extremes like this are sweet for averaging or for looking into shorts. We still don't get one of those. And we finally have met with the middle line in terms of the liquidation dominance. That means that now so many shorts are being liquidated that are starting to compensate in the oscillator in such a way that we are for the first time in red in more than 1.5 months. So we could say with some confidence that the period of liquidating longs that they dominate the spectrum has ended, and that we should be looking for some season of shorts being liquidated. That is also eventually coming into an end, and you can see the whole cycle in here, how long it lasts. Each one, shorts or longs, getting all the love. And I want to focus on also another question from my community, which was, are spot or futures dominating at the moment? And the last reading is the 29th of September, which is yesterday, where futures was dominating. You won't be able to see it, but it's a light blue appearing in there. But there's been a combination of spot some days dominating and then futures dominating. To be fair, compared to this last leg up of the previous cycle, which was absolutely futures dominated and therefore ended up being just a dead cat bounce, this area in here still has some spot dominating. And I believe on Coinbase, spot is making news today in terms of people buying in or institutions. I don't know. Let's look at liquidation levels. What are we building on the downside? What do we have on the upside still? This is short term. You can see that the pattern in here got held and it broke out into number one. That is 119.5. Then we have another one at 121. So in case that RSI on the 4-hour pushes into the top of the range, if you got good memory, you probably remember this 85 that pushes you into 121 precisely, which is number 2. So there is liquidity overlapping with that. There is a chance that we also go for it. After that, we have number 3 at 126 and then 129, ending more or less at 130, slightly below that. We need to look into the order book and see the placement of all the people with their ask and their bid liquidity. And I also want to zoom in and leave all the red outside so we can see what's going on in terms of the risk in here. Let me put the red just slightly outside. And you're going to see that the largest liquidation pool in the short term on this whole move up is 112.5. Yeah, unfortunately, I already have my stop loss a little bit higher, so it could get hit. So I need to be very, very vigilant with this in case it gets hit from higher. If we go to 112.5 to start building again another long. At that point, my short will be in profits anyways. Long-term liquidity, remember that we have a neck in here, so that is breaking out from a double bottom, pointing into number 2. Let's see if we can get there, and I don't need to really do anything with my long. Last 30 days, of course, all the liquidity is in here because of the recent move. This allows us to focus on where are we leaving liquidity from longs, primarily because we haven't been at 120 in the past 30 days. We just pinched 119.5, and this is the liquidity that the shorts have left located with the risk at 120. I'm tracking the shorts. People are claiming that the shorts are being decimated, and we have 479 million liquidations of shorts. That is across all the coins in the past 24 hours. And as you can see, if we look at the histogram, that is still nothing. So from the point of view of liquidations, I wouldn't say that we have something compensating for all the longs that got liquidated in here. I'm not necessarily expecting to get a 2.8 billion again of shorts liquidated immediately, but something that sounds around the 1 billion is something that definitely the shorts deserve at some point in this new season of shorts being liquidated primarily. Purple whales, not much activity, I will say. Let me zoom in here. As you can see, they are a little bit lacking decision and confidence in this rally. It is the brown whales, the ones. Can't believe that brown whales are leading all this thing. They've been accumulating all the way down and they continue. they took a loss, I will say, in here, declining on the way down, but then they resume accumulating with new positions into USDT Binance futures. That is what Material Indicators is currently tracking. You can also get discount for this, by the way. Notice that green ones are trading at the moment long. That's 1K to 10K. Orange, the smaller ones, are pointing down together with the red, together with the purple. Interesting. Order book, where is all the ask and all the bid? That is the sweetest spot in the video. I love it. 123.5. Interesting. 1.3K located right there. That could be interesting for my shorts, since I already entered at 119.5, failing my short that maybe I could add something around those lines, or maybe I can front run them. I don't know. I'll decide later. Support is 118, 117.5. We have 112.5 with some support there. There is a liquidation level there that could be part of it, together with some people speculating of a move down into 112 to buy the dip and to take advantage of the liquidation, of course, which makes me a little bit itchy because my stop loss on my long is right now in the profit area, but I have it somewhere in here. The net long continues to increase, the net short decrease. The open interest took a dip in here because it hit the liquidation of 119. You want to see that? You watched the video from yesterday. We were aiming for 119. I was saying I'm gonna leave some gap, some room to breathe for my long, because I'm aiming for higher. Now we got plenty of liquidity to the downside that we can see in the delta that is extremely elevated risk for the longs. That is 766. What am I doing with that? Well, I'm looking into my short. Where is the open interest increasing the most? We got open interest increasing by 500 million at 117.7. That is the first chunk that we can see of the open interest increasing. Then we got some at 113, very little, not that much, 466 million. And then we have 568 at 111. Of course, getting into there pretty much, we're going to be closing the CME gap if we do that. But the largest is 117.6. My stop loss is below that. So if we take only that, I am not at risk. Just like when I put my stop loss at 111, when we came for this open interest, I didn't get stopped out. I'm not always gonna get it right. Particularly if I put too much risk and I put my stop loss at 116, I feel like I'm risking a pinch in a rally up that leaves me behind, and that's why my stop loss is slightly lower. That's what I mean with giving some room to breathe to the long. Support is very intense in the 10%. 92 percentile is defending it with strength. 1%, 2, and 5 are all around the 50 to 60 percentile, which is some defense, but not a lot, really. Funding rates increase sharply, and that really helped the price to go slightly higher into 119.5. You can see a double bottom of negative funding rates there. Something that is putting the longs now at risk. The move up, which is again another reason to enter in my short, is that we peak with the longs at 64. And as you can see, with the aggressive move into 119, now we are sitting at 42. We are below my blue line. Guys, what has happened when we are below my blue line? Not always, but sometimes we peak. And we move down in here 3%, but this was a local top. This moved down 13%. Not always, yeah, I admit that. Sometimes it's just a pullback of 3% and then we resume. But I find this move down in the longs a little bit sketchy. So I feel a bit better hedging with that short. Support in pretty much all levels is either a bit negative, neutral, not that much. There's an equilibrium at the moment in the order book in all depths. And I got a sweet signal for you guys. In the past days, In the past weeks, actually, I've been talking about long signals. I talk about this long signal and this one. Both of them were CVD aggregated and anchored on high block capital, giving us an area of a bounce. This was a small bounce and this was the bounce, right? Perfect. Together with an overlapping extreme of shorts being at high risk of liquidation pushes price up. Twice in a row, overlap, reversal to upside. What have we got today? We're the opposite signal I'm giving you guys. And if you haven't hit the like and if you haven't written a comment down below, that is because you deserve a massive, massive middle finger. Here you can see that that signal is coming up on the anchor VWAP, anchor CVD, nothing to do with VWAP. And also the longs are peaking in the anchor liquidation level size delta cumulative. We have 700,000 on delta, so that's why it's printing. As you can see, here we have a signal that failed. It had an additional upside of 3% before reversing. So don't take signals as this is the moment to mortgage my house, sell it, and buy all in because Trading Parrot has crystal balls. I'm telling you, I do not have crystal balls. These are just probabilities. My balls are completely on a different level. They do not forecast price, certainly. And more risk for the upside. Again, no guaranteed downside. We have this trend line breakdown. We are approaching it at 121. Watch out what happens when we meet with that line if we do. If we don't go higher, we have here an amazing overlap of fair value gaps on 4-hour with daily that can send us into 114.8, okay? My stop loss is a bit lower than that, so I'm allowing for room for this to go as to get there. If we get into 113.6, I'm still safe. But if we go into 112.3, I hit my stop loss and I take profits because I enter at 111. It's a small profit, but my short will give me back what my long couldn't. 109 is the next fatty one, and if we go there, well, you know, we revert pretty much all the gains that we have done in October and we go slightly in the red. That will be a move of 7%, but in 2024 we have a 12% guys in October. That's in the same cycle, and in October we moved 12% before a very bullish November. So if you're not considering that possible, I don't know what you're thinking. So I'm gonna do the summary of the video, guys, and we got a breakout on the 4-hour that has almost achieved the maximum global bullish target on the 4-hour. Price can continue even higher than 2020, the 121, because at that point we could see the RSI, the momentum peaking, but the price can carry on at the cost of a bearish divergence. That's how you can get into 125. Still not breaking out with the RSI. Assuming we don't break out, there is a high likelihood that that 85 is it, but no one knows if the price is gonna want to contain that. So when it comes to my new short, I need to be aware of that. On the daily, we have a Gartley pattern and there is plenty of elements, fair value gaps, CME gaps, liquidity, you count it, delta, signals on high block capital for CVDs, excessive amount of liquidity below form too quickly that can bring this guy to play out as a Gartley pattern. I do not know if it's gonna play out. It's gonna have to come into senses, maybe with the breakout on the daily, pinching 56 and maybe holding it for additional upside if we want to follow the seasonality of October, or if we want to notice if this is a failure, we have to go below the 56 and close below the 56 today, which is Thursday. I hope you enjoyed the video. If you did, hit the like, subscribe. I'll see you later in the Elite Private TA session. Thanks so much for watching. I'll see you in the next one. Bye-bye.